Oh, wow, I see a bunch of people joining my live stream. I'm actually about to go live on another crypto TikTokers channel in a second. Actually, give me 1 second. Let's see, is he up for that? Yeah, go to Crypto Insight right now because I'm gonna be on his channel on TikTok in like 5 minutes. I'm just trying to make sure I know how freaking live works. Here we are. Boom. Figured. There we go.
Here we go. How are we doing, mate? You all right?
Yeah,
Sorry,
yeah.
looking
Good, looking good.
Good. So, good afternoon, everybody. I'm live here with Quincy Jones. If you don't already know him, I'm going to let him introduce himself in a second. And we are going to be discussing everything, mainly XRP, as I'm mainly an XRP channel. But let's have a dive inside of Quincy's mind today for the time that he spares us. He's a genius, is the first thing I'd like to say about him. He's a programmer inside the crypto world. So what he's going to give us is a inside out view, whereas we're normally outside looking in. So that's going to be awesome for us. And yeah, go from there, Quincy. I'll let you introduce yourself. Nice to meet you.
Hey, yeah, so my name's Quincy from Coin Club Crypto. I bet you guys probably heard of me in the past few weeks. And so I'm a software developer. I have previous experience in cloud development, but I've been branching into crypto development for the past year or so. I previously worked at a private equity firm, so I deal with the financial sector in a sense too. And I've been programming smart contracts for them on Corda, building out certain applications on XRP. I recently got hired at Zinfin, so I'm actually programming on XDC2 quite constantly. And it's one of those things where I've always been a developer, but I'm new to being a content creator. So now I'm a new content creator on YouTube, TikTok, Instagram, and Twitter. You can find me at Coin Club Crypto, and you can find a lot of my content where I break down a lot of the technology in such a manner for people to understand.
Yeah, that's awesome. And I think that's like one of the best things that I've seen from you. Like, obviously, you have a much deeper understanding of the technology than someone like me would be, but you break it down in a way that I can still understand it. So I think that's really important. And that's why I think you've obviously blown up in the last few weeks, which has been awesome. I presume that you've had a really good time. It's been exciting for you too, but it's been awesome to watch. And it's so good to have someone from your background come in and like explain to us what's really going on, because we only get the picture that we see. So for me, especially, like, coding's like it is a new language. Like, I don't understand anything. I don't understand what goes on behind the scenes. So when you have someone come out and talk about it, it makes it so much better for us. So I want to just say, everyone who's not following you, go and give them a follow, and we'll put some of your links in my YouTube, and I'll promote some of these on my TikTok. But it's just awesome to have you here. So anything you want to fire off, or do you want me to just how do you want to structure this? I hadn't really planned a structure. I just wanted to chat to you, man, to be honest.
I don't really know exactly what to fire off, but the first thing I'd probably say is well, thanks for having me on for sure, and thanks for everyone watching. But what's some questions you may have, or what's some questions that your viewers may constantly ask you that you may want to fire off?
Okay, well, there's obviously a massive array from a lot of different things, but one of the most common ones, and probably one of the easiest to answer just to get us warmed up, is centralization of XRP. Is that too deep or too shallow to start with?
We can start with that. I've heard a lot of that too. People seem to get confused with the UNL list, and is that what you're usually going with, or is it?
No, I mean more like in regards to XRP's ledger and like proof of work consensus, the way that the nodes I don't know exactly the terminology on it, but it's like 80%.
I can go into that. Yeah. So typically when it comes to blockchain consensus algorithms, people are very familiar with proof of work and proof of stake, and those are the two big popular ones. There are a very vast array of one, like proof of availability, proof of state, proof of history. But XRP has a native consensus algorithm where, just like any other algorithm, it's written in code on the network and it runs every 5 seconds. So what ends up happening is you're able to get that general consensus every couple of seconds on the network, and you're able to share that data generally distributed over the network. So you're able to get higher performance, faster fees, and sort of a greater granularity on how you can scale the application due to that algorithm being natively cooked into the software itself. So with proof of work, they've got to go out and crack a bunch of hash. It's almost like the way I like to describe it is, you know how people back in the 90s, you'd see the hacker going, "Ooh, I'm gonna brute force in." That's exactly what not exactly, but that's what Bitcoin's doing to crack the hash. It's doing a brute force method to try to crack that hash. It's a very energy consumptive, and proof of stake actually tries to solve that problem by basically using the stakeholders as basically a trust mechanism to get them to help secure the network, which makes it a lot more efficient than a proof of work. But like I said, XRP, they cook their algorithm into the base code. The base layer code is they have the base layer code algorithm cooked in to where it is constantly running. It runs every 5 seconds. It runs in multiple layers too. So what's happening is not only is it running every 5 seconds to where you can see your payments happen almost instantly, it's doing its payments and settlements under the hood. So you see the payment go through in like 3 seconds, and at max the settlement may take 5 seconds to fully programmatically go through. So it gives you a high level of performance by having that native algorithm.
And by go through, that just means confirmed across all the nodes. Is that what that means?
Yeah. So it's actually it's gonna confirm against most of the nodes. What's gonna happen is whatever node does a transaction. So most of the time, and with most blockchains, each node has a copy of the entire blockchain. In XRP, each node has a fragment of the entire blockchain. So what ends up happening is a transaction will happen on a node, and then it will broadcast that transaction to the rest of the network, basically to all the nodes that are close by to it. Then once it's able to do that, all it really needs to do is make sure that all the nodes around it on the network confirm that transaction happened. Once they're able to do that, you don't need to save that same data on all the nodes on the network. You just need to save that data on all the relevant nodes for the person that needs that transaction, basically giving you that high level performance for the users that need it, rather than just abundantly having all this information on all the nodes all the time. It's what really, it breaks down on the amount of energy consumption, because you don't need to share all this data everywhere. You just share it to the relevant parties, and then it'll mesh itself throughout the network. But then it gives it high level of performance because it's not trying to sync up with the entire network for having that one transaction on every node. It just, all the nodes need to know that transaction happened. They need to know the final state, not the actual the transaction itself. And that's the thing. They just need to know that it happened. It doesn't matter if they actually have the data on their node itself. It's part of the broader decentralized ledger. So, and I can get more into that too on my channel. But
that's great. So, but like in regards to that, I've kind of got a question. This is me personally. It's just come off my head from this. So, I did understand that it didn't keep a whole print of all the transactions that have gone on before. But one thing that I don't think I personally understand on the back of that is, so where is the whole print of all the transactions? Obviously, we can see that, if we go onto XRP scan, we can find transactions, but where's that kept? How is that?
So
how is that?
The way you want to look at it is it's the very definition of a distributed ledger. So the one way you might want to look at it is, say you had a network of 10 nodes, right? And to really get the maximum efficiency out of that network, let's say 3 to 4 of those nodes need to have a copy of any transaction that happens on the network, while the rest of the nodes just need to confirm that it happened. So what ends up happening is you can save a lot more data on a lot more nodes, because let's say every transaction, 4 nodes need to know that it happened, and the rest of the nodes, or 4 nodes need to record the data, and the rest of the nodes need to know that it happened. Well, instead of saving information to 10 nodes, you're saving it to 4. Yeah. You're able to have a lot more, you're able to get that same level of granularity with a lot less information, just because that same information, so a lot of people like to look at it like this, that same information, instead of being kept on just a broad, giant database that you can just access, and every node has a copy of that database, the entire network is the database. So when you're looking for a transaction, you're scanning the entire network database to find that transaction. So if you go to this node and that transaction's not there, it goes to the next node. If it's not there, it goes to the next node, and then it finds it, and then it reports it back to you.
Sure.
So what ends up happening, so what ends up happening is you get a higher level of performance with that, because you don't need to save every transaction on every node, just on the relevant nodes. And then when you look for it, you find that transaction on that node or that cluster of nodes, and then it confirms that it happened and blah, blah, blah. So.
Okay, sure. So that makes sense as to why it would be faster then, because it's not storing as much information. Is there a capacity for the nodes to have information? What happens when do they reach capacity over time? Does it slow down, or is it just as more nodes get added, the distribution
there's a way
changes?
There's a way to there are different ways to manage nodes. So you can actually host a full history node. They actually don't recommend you do this because it's incredibly after I think it's what's it called, after around 2 years of history data, it's almost irrelevant, because that data already happened, and all you really need is just to see the you just need to see the past history so far to get whatever previous transactions that happened. So really, you just have a limited history on each node, and you can choose how. But you can have this history be 2 weeks if you really wanted it to be, as long as there's some package data on the network within the past like period of time that you can see and scan on the network to find. Then it doesn't matter how much data you have on the node. It just matters that you can find the relevant transactions. And what matters is every node on the network has some relevant transaction. There's no node on the network that doesn't have. There's no like blind spot on the network where someone just deleted the previous info and no other node on the network has that. Either the original node that created that transaction has that, or the nodes around it has that, or it's just part of the broader ecosystem. Does that make sense? Like,
yeah, I've got that. That's awesome. I just want to say, like, my chat are loving you, by the way, guys. There's been loads of shout outs for you saying, Quincy, my man, one of my new favorite crypto TikTokers. Guys, go over and follow him if you don't already. He's new to TikTok. You can obviously click his name there and drop him a follow. His info's class. And this is why we're doing this, because we wanted to give you a snapshot of what Quincy knows. And he knows, I tell you what, he knows a lot more than me. I'm just a investor, speculator. He actually understands the tech behind this. So let's go on to something else then. So what really interests me is when you talk about CBDCs and maybe more in relation to XRP. Someone's dropping you some shades.
Yeah.
In relation to XRP. So yeah, could we just dive into that a little bit? Like let's go more specific. Let me try and help you out with the question a bit more. So let's go more into what your speculation is on how the American digital dollar is going to be in regards to XRP. It's a speculation, of course, because we don't know. And I'm going to get into some more on XRP in regards to what you think is going to happen. But can we go straight into what we think is going to happen in regards to the digital dollar in and around XRP? I've heard you talk about issuance and stuff like that before, but I'd like to go into that.
So a good way to look at this, and this isn't even speculation because this is how you use the technology. The real speculation would be, are they using XRP for this use case, or are they using somebody else for this use case? And I'll explain what the main use case is. So with XRP, you can issue not only other currencies, but other assets on top of XRP. And XRP operates as a decentralized exchange, and it has a series of features on it that will essentially expand that exchange liquidity. So what ends up happening is let's look at currencies, for instance, right now, just because of CBDCs. So what you could end up doing is you could actually have a overall network where, let's say in this, that's cute, the glasses. Let's say in this scenario, you God, the glasses threw me off. I'm sorry. But,
you see, it's the future of them, man.
Yeah, I looked away and I look back and I have these like cyber glasses on. Oh goodness, oh my goodness. What were we talking about again?
We were just talking about CBDCs and how you're doing a currency example.
So what you could do is, let's say you had an XRP. Let's say XRP was worth $100 in XRP. What you can end up doing is you can actually issue CBDCs backed by the value of the XRP. So let's say you had $100 worth of XRP and you're able to issue $80 worth of CBDCs. Well, what ended up happening is you're not really like creating a digital, you're creating a digital currency derivative of a broader currency, and then you're using that broader currency to exchange that currency derivative over the network. Now, the reason for this is to be so important is not only can you issue currencies, but you can issue assets. So I could issue homes, I could issue stocks, bonds, derivatives, futures contract, options contracts, and what you can end up doing is you can take the broader abstract value of the cryptocurrency, issue stable coins that are backed by the abstract value of the cryptocurrency, and then use that to pay for digital assets on the network, whether it be an NFT of a home, whether stocks, bonds, derivatives, futures contracts, all the financial instruments that you want. And then what you're able to do is, since it's a decentralized exchange, you can have the maximum amount of liquidity for anyone on the network, or anyone in the world that is, where you can basically go out and buy something over the network from anywhere in the world instantly without having to go through a series of different clearinghouses and a series of different middlemen and all of that. So what ends up being great with XRP is this basically ends up being not really a one-way solution, but a one of many possible public platforms that could allow for global trade to reside on with the maximum amount of efficiency.
Yeah, okay. I think I've got a lot of that, but I don't know if I got all of it. But so in regards to that, what you were just saying, so if we use the basis of you could print 100 USD to one XRP, like how would that work in terms of transactions if there was more volume on the ledger? Would XRP become a stable value, or is that just an example of how I don't? That's
what ends up happening with that is you don't actually need XRP to be a stable value to use it as a essentially. I like to call it a deliberating asset, but that's not really a good way to put it. But the biggest thing about it is it's an asset that you can issue other assets on of, and you can make decisions on what those assets can do. So basically what ends up happening is you're able to create other assets under the XRP ledger and then use those assets in the same technological manner that you could use XRP. The only requirement, especially when it comes to crypto, or when it comes to actual stable coins, is that the XRP value needs to be collateralized appropriately for the stable coins that you're issuing. So if you have $100 worth of XRP and you have $80 worth of stable coins, you're good. But if the value of XRP drops to $79, you have one stable coin that hypothetically doesn't exist. Now, there are actually mechanisms on the network that you can actually if you actually go to David Swartz's YouTube channel, he talks exactly how you can do this. But there are different ways that you can actually quell that problem by having different margin call events or liquidity liquidity pool events where it would actually just liquidate the XRP when it's under collateralized and a bunch of stuff like that. But the main point about it is XRP and these digital assets as a whole won't necessarily be like the currency that you're not going to really go buy your house with XRP. You may actually use an abstract value of stable coins. And that's the thing. The reason for that is you can have the XRP and have the abstract value and not have to jump into dollars to do that. You can still have, so if you have $100 with XRP and you can issue $80 with the stable coins, you don't have to give up your XRP to have $80 of stable coins. It's just backed by the XRP. See what I mean? So that's basically the main use case that you can use XRP for issuing assets under, because you're able to back it by the overall abstract value of it, and then use that stablecoin as a means of transaction over the network for any other asset. Which means the price of XRP is almost irrelevant. It just needs to maintain a volatility that's low enough to where you don't get crazy swings to where if I had $100 with XRP and 80, so it doesn't need to have like a super small volatility range. It needs to have a predictable volatility range. That's probably the best way to put it.
So from what I'm understanding is, and this is what I really thought already, you don't really, it's the XRP. You basically swap through XRP rather than like having it particularly as a mean of value or / exchange. Is that what you're saying?
Exactly. And then the value of XRP is all the value of XRP determines is how much liquidity is in the entire ecosystem of XRP. So if XRP is worth $1 and there's 100 billion XRP, then there's $100 billion worth of liquidity in the ecosystem. And then obviously that's different based off of the circulating volume. So there's that. But just in general, the price is only going to determine the overall liquidity in the market. So when people talk about high prices, the biggest thing that you need to really be concerned with isn't so much how much wealth is going to be really on XRP. It's how much wealth is going to be traveling through XRP. Because you got to remember, so if I wanted to let's say I was an investment banker, right? And let's say XRP is worth is worth $1 right now, and let's say the trading volume is at like 50 billion, right? So I've got $50 billion worth of liquidity in the market. Well, that means you can make a maximum purchase of, and this is ridiculous because this wouldn't actually happen, but you can make a maximum purchase of $50 billion because that's the maximum amount of wealth you can move through the network. You see what I mean? So in order for you to be able to move more and more wealth to the network, the price needs to go up to accommodate that, because it's not just you, it's an entire ecosystem of people. So the price needs to reflect that in regards to people traveling wealth through the network, because they have to go through XRP. You got to remember, so if I had a stable coin on XRP and there was a stock on XRP, I've got to go through XRP to buy, I got to go through XRP with the stable coin to buy the stock. Which means that's volume going through the network just to be able to transact from one asset to another asset. You need liquidity for this. So the price is going to be entirely dictated by that dynamic right there. How much value can move from point A to point B through XRP, whether it's on the network or off that network. This is also if you wanted to go from let's say you had USDC and you had stocks here, but let's say you wanted to go into like US dollars, like banking dollars. Even that matters too, because it's value going through the network. And that's really what's going to determine the price. And that's the thing about that is it's a leveraged value bet. So it's not that like this X amount of value is going to be needed to go transfer this much through the network. It's more of there's going to be an overstep of value due to supply and demand because people are going to be pushing up the price because of that exchange, and then it's going to be overvalued in terms of liquidity because it needs to have that. If it doesn't have liquidity, people can't make payments, so it has to be sort of overvalued in a sense. And that doesn't mean it's going to be super high or whatever. It just means that whatever sort of number that you have in your head, I would probably add another 20% because you need that higher level of capitalization, so you don't have that liquidity or that liquidation problem that I mentioned earlier with the stable coins. You see what I mean?
Yeah. So like a cushion.
Yeah,
like
basically.
Extra cushion. Yeah.
A cushion.
Sure. So
yeah.
So one thing that I can't then off that logic this is the understanding that I had anyway from what we're talking about. The one thing that I don't quite get my head around is so. The people like me, for example, I obviously don't hold loads of XRP, but I've got some and I'm holding mine in my ledger. I presume that obviously isn't being used like in a functional way. That's just being stored in my wallet in the ledger. So that obviously takes away from the liquid supply of XRP. So does that in turn mean that the price needs to be high because there's less liquid supply, or does that mean that it can still transact the same way but just with less volume? That's where
I'm glad you brought that up because that is a very, very interesting question. So a lot of people look at like the general supply and demand economics of these, especially in terms of retail, where they'll go, well, it's good that it's not that people are holding on to it because that means the circulating supply is less. And that's sort of good, but what you really want is you want volume. You don't want and that's the thing I guess that makes sense in regards to the ratio of the circulating supply as opposed to the volume on the network. That matters. But the real thing is volume. So, yeah, sure, it's helping towards the broader upward push in price by having hodlers hold it. But for every one person that's holding that onto their XRP, if there was a business out there that was just conducting daily business operation volume on the network, you'll get way more of a price push from that because you have value going in and out of the network. And that's the best thing that you want is you want value going from outside the network into the network and then staying into the network, and then you want the demand to be built on the network. So you want the demand between the stablecoin and the assets on the network to be high, so the value doesn't leave the network, and it creates more value on the network for people trading.
Yeah.
So imagine it like this, right? Another way to look at it too. Let's say I had a Tesla stock on the XRP ledger. Well, as Tesla stock goes up, it requires more stable coins or more XRP to buy that Tesla stock, which means it requires more volume of capital to buy. You see what I mean? So even if you had stocks running on XRP, the value of the stocks going up could increase the value of XRP solely because it requires more volume to buy those same stocks. You see what I mean? And that's why it's important to get that volume on the network.
So basically, anything of value that's brought onto the network is basically double because you'd have to have the value of the cash to buy it anyway, or the stable coin to buy it. Is that right?
It's not quite that it's double. It's a really weird way to look at it because it's a weird leverage thing. So what's going to happen is what best way to look at it is 99% of the things that are going to reside on the XRP ledger will not be XRP. So it's going to be really weird because you're going to have 99% of objects traveling through 1% of the objects to conduct the trade on those objects. You see what I mean? So what's going to end up happening is the sum value of all the objects on the XRP ledger, whether it's currencies, bonds, derivatives, stocks, whatever, all of that. And that's the thing. It's not the overall value. It's the entire volume of all of them put together, traveling through the amount of XRP on the network. That's really going to set the price for XRP.
Sure. Okay. Yeah. I think that confirms everything that I was basically thinking anyway. My other thoughts about this is I've got two leading off this. So we've looked at federated sidechains recently. How does that help or increase the volume or increase? Because obviously it will still be on the XRP ledger, but from what I understand, they can issue their own stable coins and it wouldn't need to necessarily go through or their own cryptos. It wouldn't necessarily need to go through XRP. Is that right? Or am I
the biggest thing that I've seen with federated sidechains are private accounting mechanisms. That's the best way to look at them. Private accounting mechanisms that are not quite off the XRP ledger. They're almost like the best way to look at them are private accounting mechanisms because a lot of people can do stuff like this. It's just that the volume that's there obviously won't be entirely contributed, but it's like a tiny siloed volume. It's going to be going in and out. It's just while it's in here, it's not going to be doing anything for anything out here, but its only outlet is back onto the ledger. You see what I mean? So it's almost like imagine this. Imagine if the ledger was one giant public vault and then side chains were almost like little private vaults. Now, whenever you leave the private vault, it's not like you're going anywhere else but the public vault. It's just that private set for whatever you're doing over there. So And that's the thing that goes into that your question about like people that hodl the coin. That's just going to take a little bit off of the a little bit out of the market in regards to them using it over here, and it will add a little bit more of upward pressure to the price because it's gone. But that's the thing. You're gonna get the volume back onto the network once they start doing public transactions and they start doing whatever and whatever they want to do with it, they will come back onto the network to do it. That's basically what's gonna happen.
Cool. And then, so I guess this leads on to my next sort of question is, so why? Obviously, we know about speed, but I think this would be quite a cool topic to discuss, especially for content. But why would you, as a developer, and why would people want to bring things onto the XRP ledger? Where's the benefit for them?
So XRP, the biggest thing about XRP is it's a decentralized exchange and it has a series of features on it that, in my opinion, make it one of the best decentralized exchanges out there. Now, the two big features on it is, well, one is the decentralized exchange. So what you can end up doing is if you were running, like, let's say you were running a centralized exchange and you wanted to tap into broader liquidity. Well, what you could do is you can line up your order books with anybody else's order books anywhere else in the world on the network to get access to more liquidity than you otherwise would, because in a traditional sense, you have to do a partnership to get more liquidity. You have to raise capital to get more liquidity. There's really no way to tap into broader markets to do that. So if you're an exchange or any type of financial institution, you can already tap into the global landscape of liquidity on the XRP ledger right off the bat with a high level of liquidity, performance, speed. But that's not the only thing too. So because it's a decentralized exchange, it actually has a series of features on it that make it just awesome. And one of the features is called rippling. So what ends up happening is, let's say I want to make a transaction, whether I'm an exchange, whether I'm an individual, whether I'm a merchant, it doesn't matter. And let's say I want to be like kind of goofy. I always give this example, but let's say I had a bunch of Tesla stock as abstract value, and I wanted to be able to go buy a loaf of bread at the grocery store. Or let's say I had a bunch of milk derivatives on an exchange and I wanted to be able to get Japanese yen, and I'm in America, so I don't have any access to liquidity for Japanese yen. So let's say I have a weird scenario like that where I need to get from one asset through another asset into the asset that I need to be able to buy something. Well, XRP has a feature called rippling that allows you to do that, and it'll let you do that as far down as you want it to go. So because it has a decentralized exchange, let's say I had the milk derivatives example, right? And I wanted to get into Japanese yen. Well, if I'm trying to interact with somebody in Japanese yen, they're going to go, I'm not going to take that. I need yen. So what I can end up doing is going over the network. I'm live streaming, bro. I'm going over the network. What you could do is over the network, you could. Oh gosh, sorry, my friend came through. What you can do is over the network is that first transaction will actually go through the decentralized exchange, find liquidity for an asset that's needed. So let's say it went from milk derivatives into US dollars and then US dollars into Japanese yen. And all it did was it just found someone to transact on the network, somewhere on the global network to transact with. It just transferred from, and that's the thing, it's just, so let's say I had the milk derivatives, somebody else on the network had US dollars, so we did the transaction. So now I got US dollars. Then I need somebody else on the network to transact the US dollars for Japanese yen. Now I got the Japanese yen. Now I can finish that transaction. But that's the thing. XRP does all of that for you instantly. So you can have liquidity from one asset into any other asset on the network with pure liquidity, because it will literally make all the connections needed on the network for you, and then be able to make that transaction needed. So you can hypothetically take any asset and convert it into any asset instantly on the XRP network. And that's sort of the biggest draw to the technology, in my opinion, at least for XRP.
Okay. And that's, I presume, why when people say that, like, when it starts to grow, like gets to a size, it will just grow exponentially big, like really quickly, because especially if they use an exchange feature like that, if a lot of people need to and realize that they can start exchanging things, as soon as there's liquidity to exchange, well, as soon as more people understand that and want to exchange things, they can just exchange anything they want, like you're saying, through XRP that quickly. So the way I picture it in my head is kind of like a search engine that's just running like super quick. Yeah, okay. I like it a lot. So the next questions, and we've had this quite a lot in the comments already, as I'm sure you'll be aware, and you probably get this a lot. So let's go for price predictions, and let's have a look at why we might reach some of those price predictions, and give me some sort of time frame. Obviously, there's speculation. We're not financial advisors at all. We're just talking and having a chat.
Yeah, I don't really do price predictions, but I can say this. One thing that you really need to look at when it comes to XRP and the overall value that's within XRP, and this is what really people need to get, because it's almost like this is what you're kind of asking when it comes to a price prediction. You're basically asking like, okay, so there's a race car race, and I need you to tell me when is he going to finish the race? At what time? At what speed? And that's like, 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 you know what I mean? Like who's going to get that? Like, exactly this minute and this second at this mile per hour is when he's going to cross the finish line. That's sort of what people are asking about. And the best way to look at it is you don't want to really look at it like that. You want to really look at it as more of a, well, where's he going to place? How about that? And I mean for the race car driver, not for the XRP, but you really want to look at it as where do you see it in the future in regards to where it would look at it at full scale volume, and that's sort of the thing that people need to get, and that's sort of what that's sort of what I try to like sort of instill in people, especially the hodlers. I'm like, look, you're not really investing in short-term volatility unless you're like a trader. You're investing in the long-term viability of these networks. So one thing that you really want to look at is, well, what does this network look like when it reaches its not quite its peak like let's say maximum utility. Let's say once it's reached a point where its maximum utility is just a runaway effect. Like it's just going to keep on going because it's. So let's look at that. The best way to look at that with XRP is, well, XRP, if you look at the entire liquidity in the market now, I think it's only like $50-60 billion worth of value in the XRP ecosystem. And I hate like sort of comparing it to this. The biggest thing that you really want to look at is, well, what's everything that you plan on seeing on XRP? Add up all those assets together, whether it's currencies, bonds, stocks, blah, 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 whatever. And you don't want to look at the actual value. You want to look at the overall volume happening on those networks, and you want to sort of anticipate what the future volume may be. You got to remember, the volume on these networks now are high, but they'll be higher on XRP because they'll be faster, more efficient, they'll be cheaper. You see what I mean? You'll end up getting a exponential effect of being able to do more transactions for cheaper on the network because it's able to do it more efficiently than it was able to do it before. So that's sort of the way you really want to look at it. And I wouldn't even really look at it in price. I would look at it more in terms of like market cap, because it's one of those things where it's liquidity in the market, and market cap is just going to be determined based off of how much liquidity is in the market, based off the assets on it, based off the volume, based off of all of that. And it's one of those things where all of these ecosystems, not even just XRP, but all of these ecosystems are going to have comparable market caps to a lot of the financial ecosystems we see now, mostly because those old ecosystems are going to reside on these new public chains. Does that make sense? But
yeah,
in terms of, and this doesn't go for XRP. I would say if you're looking at any handful of coins and you're looking at sort of what the long-term viability would be, the best thing I would say is like these networks are going to be multi-trillion-dollar market cap ecosystems. Now, who's going to do what and who's going to be the biggest and who's going to be doing this for who is going to be all determined. But the reason this is the case is all the financial markets are all multi-trillion-dollar market caps. The only difference is those markets are going to reside on these public chains. See what I mean?
Sure.
So that's the best way to look at it. And that's the thing. You can come up with your own price prediction there. There's a good range in there for people to sort of go. But my big thing is you're looking for that long-term viability, that long-term adoption. It's going to be somewhere in there. Don't know where it is, somewhere in there. And that's the thing, like that's why I try to equate it to the race car driver. It's like, look, I don't know when he's gonna place, but I think he'll be in like the top 3. And not that XRP would be in the top 3. I just think that XRP would be able to reach a side to where the liquidity would be needed to maintain the financial markets as they are today, on top of being able to adapt them towards future use, which means they'll be operating faster, cheaper, more efficiently, all of that, on top of being able to do what they already do.
Okay. And obviously, yeah. So everything you just said, and then plus the 20% like cushion or whatever, so that would give us like extra liquidity. But let's go through. Obviously, you can't say time, but let's just go through some scenarios about how you think adoption may occur. Like how might this happen? Like what would be incentives?
2 big things: CBDCs and regulations. Mm-hmm. So the big thing with CBDCs, I actually just made a video about this. The big thing with CBDCs, that's going to absolutely change the game for everything. So the biggest thing that's sort of holding a lot of crypto back is people jumping from fiat into crypto. Like it's like the fees are high. People have to use Coinbase and use different like apps like that. And not everybody looks at these as like technologies. They look at them as investments. So if you weren't even investing in any way, you probably wouldn't even care. And there's so many of these things that people are sort of like, how should I put it? There's so many things that people are sort of like focused on that I feel like you don't really have to be. And the main thing is, well, how should I go with this? How should I put this? I don't want to get too complicated because I feel like I've been like too technical. So I'm like trying to be like, what's the best way to put this?
I don't know. I like it, but I can always I can always break it down to people. I'm going to upload this to YouTube anyway, so if it's too complicated, I can. Even if I don't understand it, we can always talk about it offline, and I'll try and explain it to them. So just spurt out whatever you're thinking, and then let's go from there.
Let's just look at it like this. So when it comes to CBDCs and having CBDCs on the network, basically look at it this way. If CBDCs were operating on these decentralized networks, the same dollars in your bank account would be the same as like USDC and Coinbase. You see what I mean? The jump from jumping from fiat to crypto will be entirely native in the banking system. That's the simplest way I'm trying to put it. And the reason why I'm trying to say that is it won't just be native for the banking system for CBDCs. It'll be native for the banking system for all financial assets. So it's like I said, stocks, bonds, derivatives, all of that will reside because of these technologies. Now, the reason why I say that is that's what's going to jumpstart people being able to actually interact with these technologies in a native manner without having to feel like they've jumped from the banking sector to crypto. And don't get me wrong, there'll be people that'll be operating exclusively on crypto. There'll be people that'll be operating in the banking sector using crypto. But that's the thing that's really going to determine the amount of liquidity being flushed into the network. Because that means you don't have a small minority of people getting into crypto. That means anybody can buy anything into crypto, and you'll start getting people buying into products and services that use crypto that they didn't even know use crypto, like a stock trading app. Like you can have Robinhood hypothetically changing its entire back end to run on a series of smart contracts, and then boom, it's already every single time you use that smart contract on Robinhood or whatever, it's adding more volume to the network, even if you have no idea that's what's happening. And that's the thing. You could be going from your bank account still thinking like, oh, I'm just using fiat to buy a stock, but in reality, it's using a smart contract on the back end to build that liquidity. So that's the biggest thing in terms of getting regular people into the space to where they can buy goods and services with crypto. And the second thing would be regulation, because the biggest thing now is a lot of companies, a lot of like financial firms are just sitting on the sidelines because it's one of two. I would actually say there's three ways they go about this. Either A, they're like a small firm and they just do whatever they want and just hope they don't get sued. B, they sit on the sidelines because they're afraid they have to get a bunch of lawyers and aren't sure about how to do that. Or three, they just lawyer up and just go balls to the wall and they'll just they just go with the lawyers and see what happens. But the majority of them aren't in that third one. The majority of them are sitting on the sidelines, and then the small ones are doing things on a small scale, but that doesn't even compare to what they could be doing if the regulations were in play. So the biggest thing with regulations is what are the securities laws going to be in regards to what crypto is classified as and what different cryptos can be classified as securities and as equities, because this is important because it's not that people are so worried about these cryptos being just securities. It's how do you manage like regular traditional securities on crypto networks. And the big example I always get is like, let's say you had a Tesla stock. Let's say I bought a Tesla stock. Cool. Well, it's a decentralized network. So when I buy that Tesla stock, I now have the stock. Now, in a traditional sense, I would need a license to sell that, or I would need to go through a broker to sell that. But if it's on a decentralized network, I didn't need a broker to buy it, and I don't need a broker to sell it. So and that's not even the worst part. What happens if I sell that to somebody in Brazil and they're not even in the country, and I sold it to them, no broker, you see what I mean? Sure. Like what's the securities laws on something like that? And you may see a bunch of little guidelines for how businesses have to operate as opposed to what can be done on these networks as a whole. Because that's gonna be a huge thing. Like what's gonna keep people from, and this thing, it's not even a bad thing. It's just that these technologies have come into a time in which the laws have not even accommodated or haven't even anticipated something like this even happening. Like the laws for a lot of these securities and a lot of these financial instruments were all built under the guise of centralization and centralized authority to get some sort of consensus over what's happening and to actually make those transactions. Now that you don't need that central authority anymore, it totally flips the game on its head in regards to licensing, into certifications, into how would you operate normally, and how would you operate into this new ecosystem without these central parties? And that's the thing. You need clarity on that before you start seeing the absolute massive, insane adoption that we're going to end up seeing. And the only reason I say that is we'd be seeing it now if that was already the case, but it's not. So the funny thing is, it's almost like it's building up and building up and building up. A lot more people know about crypto now than they did in 2017, and a lot more people knew about it in 2017 than they do in 2014. So it's building up and building up and building up. But a lot of people haven't really gotten off to the races yet because there's no clarity yet, and there's no liquidity based off going from the banking system back into crypto natively. So those are the two things that are going to have to happen before you start seeing just insane adoption like no other.
Yeah, so that's kind of what I've been trying to tell people like who follow my page. It's just like, it's just the same way. Well, not the same, but it's essentially a step similar to like cash to debit cards, because in a sense of the everyday person doesn't really understand something's changing, but something is changing. So when we take the step from like a normal currency now, a fiat currency, into a CBDC, like people will probably still the everyday end user will probably still interact with it the same way, but it's going to be a completely different back end system, and that's what we're saying.
Exactly.
And then I understand what you're saying as far as like selling a stock or a share could go to somewhere abroad or something like that, because if you buy it off a decentralized exchange, no one really knows that you own it, and no one really knows that they've sold it. So how would they ever? And that's where there's the issues at the minute, I presume, with what's going on in Congress and this bill, even this week. But they're just, I'm not surprised they're miles behind it, because I research this all the time, and I feel like I'm still miles behind it. So like you have to cut them a bit of slack, I guess. But what would you suggest as regards to rules? The only thing I can really think of is something like everyone has identification, and everything that you have is tied onto the identification on the blockchain, or something along those lines.
What I think you're going to see is, it's actually kind of funny because this is going to be super predictable. I think what you're going to see is you're going to see more regulation on licensing. And so what's going to happen is, although you can operate on a decentralized, like in a decentralized manner, I think to operate as a company, you're going to have to get all of these licenses and all this stuff. And then in order to offer these products, basically, it's one of those things where I think it's gonna be progressively more and more challenging for people to jump onto just strictly decentralized exchanges, or not even just exchanges, but decentralized systems outside of the regulations, except for having to do like self-reporting stuff. So it's one of those things where like there's not much they could do, except if they find out you're doing something that's against the rules, they'll come after you. But then they'll lay out a bunch of rules so you don't break those rules in a sense. I think that's what's gonna end up being sort of the deal, because there's not much you can do about it other than regulate the people that use the technology for businesses, because they can sue businesses. They can go after the executives for businesses. It's hard to go after random people online operating in a decentralized manner, but if the businesses are using the technology, they can definitely crack down on them for how they use it.
Okay, yeah, awesome. So yeah, my head's starting to hurt a little bit. So let's just quickly, for my own head, I've heard you speak about XDC before and say that it's more smart contract, like more of a smart contract network, and XRP is more of a liquidity token. Is that what you call it? Is that the way you describe it? So
that's a good way to put it. I like to look at XRP. Like I said, XRP has a really good method of jumping in and out of assets with high liquidity. Where XDC has a hybrid network where it has a public and private blockchain and has a connection to the Ethereum network on top of the EVM. And what it allows you to do is you can create smart contracts, but you can essentially have public-private access over some of your data. So from a business sense, you can have security, compliance, regulatory setup, but you can still have access to those public networks. And then it uses EVM and it uses a series of other technologies to try to connect to Ethereum to tap into that liquidity also.
Okay, cool. So right, I've got a question for you now, and this is maybe like a bit more fun or whatever. So if you ran the world exactly the way you wanted it to do with your cryptocurrencies, how would you have the networks running? What would you have running where? What would you have running through what? What would you have as an ultimate end game for yourself if you were in charge?
The biggest thing I would definitely want to focus on, and I think this is probably the most efficient way you could go around building anything, is I would want, not entirely, it's sort of a two sides of the same coin. I want almost entire decentralization, but you get certain aspects of centralization in doing that. So your data for you will be centralized to you, but the entire data for everybody's decentralized on this network. And I think you can end up taking, and you see the same thing for businesses, where businesses, their data is centralized to them, but they operate on a decentralized, you see what I mean? And I think what can end up happening is you would end up getting a higher level of efficiency. That's the thing, like, I would honestly take it to the extent of like you could potentially run governments like this, because what ends up happening is in that decentralization and that centralization, everyone that's sort of local to whatever's happening knows the relevant information, while everybody on the broader network can abide by the same rules. You see what I mean? And I think that'd be the best way to really go around running anything, because that means the people that are closest to the problems can be the closest ones to the solutions, while being able to interact with everybody on an equal playing field while doing so.
Awesome. Okay, yeah, I like that. And then another question. So what are you most excited for in the let's go for medium to near term in regards to cryptocurrency. What do you think is going to be the next, or the most, not even the next, I'm not talking about the next as in the next tech, I just mean what's going to change, what do you think will change the most within the next few years?
I think the next, I would say the next, I don't know how to say this, probably the next big thing, because that's probably the biggest thing that's about to happen here. And a lot of people aren't seeing it, but the more I say it, the more people are seeing it, so it's cool. I think the next huge thing that's going to be coming into the space that's sort of not really going to change the game, but really change the way people interact with crypto is crypto equities. So that's like not even just crypto equities in the traditional finance sense. I mean, crypto equities, like people creating like equities of master nodes with returns on them, or equities of liquidity pools, or equities of smart contract systems, or whatever. And then you'll end up seeing a weird collection of autonomous equity packages coming into play on these crypto networks. And something that's not happening now that I'm really like mind blown that people aren't into yet. But I think that's going to be the next like big thing. And it's not going to be like, it's one of those things where it's not going to be like how ICOs were. It's not going to be like how sort of the NFTs were. I think what's going to happen is it's going to create a decentralized Wall Street in a sense. I like to call it like crypto Wall Street, because you're going to see all these different people that were working in the traditional finance sense package all these different equities on these crypto platforms that can essentially issue returns programmatically, and it's going to change the game. I think not only are they going to do that for crypto, but they're also going to take that same mentality and that same logic and apply that to the traditional finance tools. So,
yeah, awesome. Yeah, okay, yeah, I like that. And you think that, well, how would they someone issue something like that? Would that be through an exchange the same sort of way as what we have now, or would there be new people, like new companies issuing things like that, or individuals maybe issuing things like that? How do you expect something like that to arise?
Wait, what do you mean though?
Like, let's say I've got a masternode and I know you can get them on XDC, can't you? If you stake, was it 10 million XDC, you can get a node. Is that right?
Yeah.
So say if I had one, how would I issue equities myself off that, or what would you?
Okay, so this is where everything comes full circle and come all around. So this is where NFTs, smart contracts, and payment tokens all come together to create the new finance system. So let's use XDC for example. It's a perfect example. So the reason why I say this is, let's say you had XDC, right? But let's say you only had 1 million XDC and you didn't have 10 million. So you need to do a raise or some funding round of 9 million XDC to have enough for the node. But that means you need to basically clue in your investors for their equity in order for them to buy that, in order for them to invest. So let's say you package the node as an NFT, and you package that NFT in a smart contract. And that NFT is essentially representing equity. Now you basically tell people you can buy so much of this equity for so much XDC, and then once all the equity is sold, we have enough XDC to run the masternode. Now once they have the equity for that masternode, the original NFT is going to be within a smart contract that's going to communicate with the masternode. When the masternode gets returns, and I think for XDC it might be 2% in XDC. I could be incorrect, but it's something like that. It's like 2% returns. So whatever the returns would be, it would return it to the smart contract, and the smart contract will return it to the equity holders individually. So what would happen is the smart contract will look for where the equity is on the network, basically go, oh, that's where the equity is, and then give the returns to it based off of where the equity is. And that means also, so let's say I was the original founder of this equity node, and you were one of my investors. And let's say you were on board for like 6 months, and let's say XCC went up, let's say the value of the node went up because there were more nodes in the network. That means there's going to be so many nodes in the network. So if there are more nodes in the network, the value of your node would actually be more, because then if people wanted to buy equity in another node, there'd be less nodes to do so, or less nodes to be able to do so. Or at least less nodes to create newly. If somebody else had a node out there that wanted to issue equity, they could. But what ends up happening is, let's say you had equity in my node for a little bit, and let's say you wanted to cash out your equity and you wanted to buy stocks with it. You could sell that equity to anybody else on the network, and they will automatically, at whatever time that the smart contract executes, they will automatically get the returns based off the master node to the smart contract to their equity. So you can pass around these equities, and the smart contract will still just know exactly where. And all it's doing is just looking for where the equity is on the network, which account it's associated to, and it'll just send the returns or send the dividends to that account. So what ends up happening is, as opposed to a traditional finance system where every time you move an equity from point A to point B, whoever the central control was has to maintain the dividends from point A to point B, the smart contract can basically programmatically determine dividends based off the master node to the equity holders, even if you sell it multiple times to multiple people on the network.
Okay. Yeah. Okay. Yeah. That makes sense. That makes sense. So it's just a full automated system, basically, almost similar to what we were explaining, even with XRP, but with smart contracts like intertwined. So I've got another TikTok legend just joined the chat. He wants to get on with you at some point, but he said, and we've kind of talked about it already, but we haven't actually gone into specifics. He says, how much of the derivatives market do you think will come onto the XRP ledger, essentially, is what he's asking.
See, the real question with that isn't so much of the how much of the derivatives market is going to come onto the XRP ledger. It's what. So there are going to be a handful of public ecosystems. XRP is going to be one of them. And you got to look at it sort of like this in regards to how these ecosystems work. So I like to look at it as you have these liquidity value tokens in these ecosystems. You've got these smart contract value tokens that are in these ecosystems, and then you got NFTs. So what's going to end up happening with derivatives is you're going to have a mixture between and that's the thing. The reason why you have liquidity value tokens is liquidity value tokens will basically bridge all the other ecosystems together without essentially having, because if you have a smart contract ecosystem, it makes no sense for me to have XDC and then try to pay for a smart contract that's on Ethereum. I'm going to pay for XDC smart contracts in XDC and Ethereum smart contracts in Ethereum. But if I'm working on XDC and someone else is working on Ethereum, I need a currency that could go from one ecosystem to another ecosystem, especially when both ecosystems are programmatically and automated. So what ends up happening is when it comes to something like derivatives, like whether you want to say XRP, XLM, a handful of other technologies that have the ability to move from different assets quite quickly and be able to bridge ecosystems quite easily, you're going to have a collection of public blockchains that are going to take over a lot of these financial instruments for that. So what's going to happen is with the smart contract ecosystems, they're going to create an entirely new world of wealth in regards to these automated ecosystems. These value tokens are going to bridge these ecosystems so people in these ecosystems can transfer value outside of these ecosystems on top of being able to use the traditional finance system to integrate themselves with these ecosystems. So XRP will definitely be one of the major players in regards to taking over the derivatives markets, but it won't be the only one. There'll be a collection of them, and it all just comes down to who's using what's being used for what. And the big reason I like to say this is like one good example is a good difference between XRP and XLM is XRP is entirely pitched to the banks and it's even formatted for ISO, where XLM is almost entirely pitched for societies without structured banking needs, and they essentially can be the peer-to-peer banking for that type of. So like if you went to like a society in like South Africa, I think 50% of the people there don't have a bank account, but 80% of the people there do have a cell phone. So you're able to get that peer-to-peer access. But if you're like someone here in America, nobody's really going to care about peer-to-peer. I mean, people do, but most people have a bank account. So it's better for the people in the banking system to use that token. And it's even though they do very similar things. So you may see them both be part of these broader ecosystems for derivatives, but they'll be used differently. XRP, one for the banks, XLM, or for peer-to-peer, or for private, I wouldn't say private finance, but something like that. And it just comes down to how the technology is being used and interoperate with other technologies too.
Okay, sure. And then I don't know if you know much about like quant or QNT, but that's what I didn't really get is like what is the need for quant? Like what I understand they help ledgers communicate with each other, but from what my understanding and what we're talking about is can't like a decentralized exchange basically communicate with everything anywhere, or am I just miles off it with that?
So I'm not too familiar with quant, but the one thing about decentralized exchanges are they need to be however they run, they need to be native. So like something like Uniswap or something, I believe Uniswap runs on the Ethereum blockchain. Something like that's great because it's able to incorporate all of the ERC20 tokens that are able to operate on Uniswap. XRP is great because you can issue derivatives, issue currencies, you can issue things on its decentralized network. Yeah, so I haven't gone too much into quant, but I presume it's the same way. And I believe quant runs on the Ethereum ecosystem, so it may have that broader aspect of being able to bridge Ethereum token. Decentralized, but I haven't got too much in the quant, so I can't say too much. That's the main thing with decentralized exchanges is they need to be native to everything that's on them, either being able to issue assets on them or being able to tap into other assets that run on their blockchain.
Okay, cool. So I'm going to just see if I've got any more questions on my little list of things that I wanted to ask you. This has been awesome, by the way. My brain is actually hurting a little bit right now. Like, awesome. I feel like it's good though because it's confirms. Like you kind of like link together a lot of I wouldn't say that knowledge gaps, but you've definitely made it more fluid and more connected for me particularly. And I think a lot of the chat, everyone in the chat's like loving you. So everyone go and follow Coins Club. What is it? Coins Club Crypto on TikTok. Go and give them a follow. And is it the same on It's the same on YouTube?
Yeah, it's the same. It's the same one. It's the same one everywhere except Twitter. It's Coin Club Quincy on Twitter, but it's Coin Club Crypto everywhere. And it's like if you look up Coin Club Crypto on Twitter, you'll find me anyway. So Coin Club Crypto.
Okay, so I've got like one or two more questions, but they're not really like too technical. So this one is, what is the biggest like issue or problem you've had to overcome in the crypto space so far? Just like on a personal level, or like what do you think's been a big issue for you or something like that?
Probably for me is just getting used to like content creation. Like I'm a creative person, but I'm not like a content creator. So when I talk about the stuff I do, it's easy for me because I talk about the tech. But sort of like getting into like making TikToks is sort of weird for me because I'm trying to make them interesting and like trying to like simplify them. It's a challenge for me to try to get the content creator down to make not only the information interesting but informative and also like technical to the point to where my biggest thing is I want people like when you look things up, I don't want it to be so boiled down that you don't know what you're looking up. I want it to be like, oh, I didn't know that. Let me see what that is, and I could actually like expound upon that. So it's like a weird like middle ground of trying to figure out how to present it in an entertaining manner, but also be able to simplify it for people to understand, and also be able to create YouTube videos and TikToks and whatever. But yeah, that's probably the biggest thing for me right now because everything else is fine. Like me talking on camera and talking about the tech and going on interviews like this and all that's great. I can do this all day, but it's like that actual like YouTuber-y type of feel or content creator feel that kind of gets me stepped up every so often.
Yeah, sure. Okay, so well, we all really appreciate you and we think you're awesome. Well, I definitely do. Like as soon as I saw you speak on Matty G's YouTube, I was like, I need to speak to this guy. Like I need to know what's going on inside that head. So you definitely are doing a good job of like communicating your side of what you see, which is really helpful for all of us. Like I don't know if I said that live on this chat because we had a little call before. I'm not sure if I said that before. So, okay, the last question really in regards to XRP, because I'm mainly an XRP channel, is like what are the main barriers that you see for XRP like going forward? What could really stop us from getting to where we want to be? Well, obviously as a speculative investors, but us in terms of tech too.
The biggest thing right now is definitely the SEC lawsuit, and it's just because it's kind of a huge spectacle that's happening. It's kind of like the big thing I would say about the SEC lawsuit that a lot of people don't like really like talk about is it's not the lawsuit that has like XRP kind of in this weird like space or in this weird spot. It's more of the uncertainty of the lawsuit that has it in. And that's the thing. It's one of those things where if the lawsuit was clear cut saying you did this, we didn't like this, you need to do this to fix it, nobody would care. But it's one of those like everything's so ambiguous, so anything can happen at any moment. So people are like, I don't know. And I think that's sort of the biggest thing that's holding XRP back is that weird animosity. Like I said, if it was something that was like clear cut, like straight by the book, everything was sort of laid out, like it was very clear, it wouldn't be a big deal. Like obviously it'd be like a hurdle for XRP, but it wouldn't be like it wouldn't have the same sort of animosity that people have about it now, mostly because it's hard to anticipate what's supposed to happen. So I think that's like the biggest barrier currently, on top of whatever the regulatory, whatever type of regulatory framework that gets put in place after. And that's the thing. That's the same reason. It's the uncertainty of it. Are we going to live? Are we going to die? Is this bad? Are we securities? Do we need to get licenses now? Like it's that. And that's the thing. It was all clear cut. And it was just a slow process to make it like just official. I don't think anybody would care. It's just that it's so unclear that the anticipation is worse than the actual like what's going to happen. You know what I mean?
Yeah, just market uncertainty, and that's what brings the price down. Like normally, an asset value in traditional markets, anyway. So that's basically the thought process that I've had. Because, like worst case scenario from this lawsuit, if it comes out and they say that XRP is security, like it's still going to be able to be traded. It's just going to be different. It's going to be harder. But there we know uncertainty then, so the price would probably end up going up. Like
yeah, I might actually end off with this. I think what's going to happen is a lot of cryptocurrencies are going to be considered digital commodities because that's essentially what they are. So a lot of people look at them as investments, but if you're investing in them, what are you investing in? And that's sort of the weird thing to sort of look into. And the reason I say they're commodities is, well, you're not buying it really like when you buy a commodity, you're buying it because that commodity has value based off of the use or the based off the use essentially of what that object is. So it could be like let's look at like a classic commodity like oil or metal or grain. These all the overall value of these objects are entirely dictated based off their use, and that's how a lot of these cryptos are. So they're essentially what I believe are they're going to be considered either digital commodities or they'll be considered a collection of different digital assets. So you have digital commodities for one, digital currencies for another, digital equities for another. You see what I mean? And you have a bunch of different packages in regards for how these cryptos are managed based off what they do.
Cool. And then last question, actually, I've just thought of one that just popped into my head for some reason, and then I'll let you go because you've been awesome, guys. So guys, go and follow Quincy at Coins Club Crypto, or just click on his little page there. You can just follow it from here. There's 99 people in here, so if I don't see 99 followers going straight onto the channel, I'm going to be very disappointed. But no, my last question is, and this could be completely off the wall, it might not even make any sense. It's just something that popped into my head is, when developers work on the network and do they work on networks like the XRP ledger? Do they need to be, and the same with Ethereum, do they need to hold that actual crypto token to be able to do that? Like, how does that work? Because that's just a question I've had in my head.
Actually, I just made a tweet right before we made this. If you go to my Twitter right now, my tweet's probably blowing up right. It literally in the first 5 minutes, I got like 100 likes on this tweet. I literally said on the tweet that you can run a multi-million-dollar company off of just 100 XRP. Now, what that means is you need a little bit of the token to operate on the network, but you could use that little bit to essentially use all the features that you'd otherwise want to use, whether you want to issue assets, issue currencies, issue whatever. And then what you have to do is, the reason why you need a little bit is every time you do something on the network, it costs XRP. It costs 12 drops. That means you need XRP to pay the XRP fees in 12. And it does the same thing for Ethereum, same thing for all the ecosystems. So yes, you do need a little bit to, that's why it's a commodity. You do need a little bit to use it, but you don't need a lot to run an organization. Like I'm telling you, you can run multiple companies off of just 100 XRP, just off of what you can do off the technology as a whole. Now, everything else is going to be determined, like what I said before about liquidity, because 100 XRP is not going to be enough liquidity for a broader application. If you're using it, that's the thing. You may not need to be the one that adds the liquidity. Maybe your users add liquidity by buying things and doing whatever. But the main thing is you can hypothetically start an application using just a little bit of the, and this goes for any crypto token. You can just by using a little bit of it and then using that for your business needs, whatever that may be.
Okay, that makes a lot of sense, because then that also adds to the fact that we've talked about a lot. It's just that it will just increase volume and liquidity. Like you'd need increased liquidity and a higher price for that to even function, because the more people you bring in, if you're then running your business on there, then the higher the price of the asset would need to be, etc. But yeah, so I just want to wrap it up and just say thank you so much for your time, Quincy. I'm sure, like in the future, we hopefully will cross paths again. I've got a few people who I'll just DM you with who want to talk to you, who've got big followings on TikTok.
Yeah, I'm so open for it. I'm so open for it.
Yeah, it's honestly, awesome to have you here.
I'm glad to do this again too. Like I love collaborating with people. I like spreading ideas. And that's the thing. Not only have I spread ideas, I want you to go on your channel and go, oh yeah, like I didn't even realize this, and I did research on this, and who knew, you know what I mean? Like I want people to like expand their knowledge on, not just from what they already know, because one thing I see a lot is you sort of see the sort of business perspective in a lot of crypto. You don't really see a lot of the technical perspective, and if you do, it's from like David Schwartz or somebody. It's not like from a regular person like me or something, or like a YouTuber. So I like that. I like the idea that we can sort of expand sort of our ideas and what we can do with crypto, and also talk about like what you can actually do. Like a lot of people look at these as investments and they're waiting for adoption, but like when you're waiting for adoption, that means there's somebody out there that's going to be doing something with it. I want to talk about that somebody that's doing something with it,
Yeah. But that's what makes it interesting for me. That's the side of it that I don't get to see. Like I've actually been quite lucky or successful, not lucky. I worked pretty hard, but like I had like an article published for like Global Macro Investor, like with Raoul Powell, like managed to speak to him. So I can see the investment side of it, but I don't really understand the tech. So when someone comes on who's normal and can break the tech down to someone, like I'm not illiterate with technology, but I'm nowhere near the level that you've got. But when you can explain it to me in a way that I understand, and then I can break that down in a way that I think my viewers will understand, there's kind of like a tree. And that's exactly what I think cryptocurrency should be about, and new technology in general, because like from where I'm standing, like I think it's going to change the world, crypto in general, financially, and in a lot of other ways that aren't just finance. But for me personally, and now I'm looking at it from a financial perspective, but I'm so interested in how it's going to work as well. So it's a double win for me. Like, spend my time doing it, and then I get to speak to some awesome people like yourself. So yeah, just I want to say a big thank you for coming on and talking to me. And yeah, I would love to speak to you again in the future. If you ever need anything, hit me up, bro. Like, you can always hit me up. And I'm sure you'll see some of these
I want to do this again. I definitely want to do this again.
Yeah, that's awesome. And what I'll do in the future is I'll get loads of fan questions for you, and I'm sure you'll pick up some extra followers from this, and they'll come over and try and understand what you're saying on your channel, and then probably come back to me and say, well, I don't understand what Quincy's saying, and I'll be like, oh, I have no idea either. But yeah, anyway, thank you so much for your time, man. Go and enjoy your vacation.
Thank you for having me on. Like, you've been awesome, like, an amazing host. Thanks for everybody for watching. Like, yeah, this is awesome. Thank you.
Yeah, so he is new to TikTok, so if you don't already go and follow him, go and drop a follow on his channel, and I'm sure he'll have his other socials linked in there. I watch him on his YouTubes. He does like more deep breakdowns on his YouTube channel. So yeah, just go and have a check of all his content, guys, and I'll speak to you all soon. Quincy, again, thank you. Nice to meet you, brother, and I'll speak to you soon, my man. See you later.
Will. Talk to the chat.
Cheers.